Everyone I speak to is worried about inflation. They see all the money being printed and all the big government spending programs, and they ask me, what's going on with inflation? And I don't blame people. We see it and feel it as we go to the supermarket in our everyday lives, and this is especially troublesome for retirees because it means that they can outlive their savings. And I want to dig into this for you. My name is Devlyn Steele. I am the Director of Education at Augusta Precious Metals. And there are two sides to the camp here. There are those who say that inflation is nothing to worry about, and there are those who say inflation is really something you have to worry about. So which one? Having gone to Harvard and studied data and analytics, I like to look at the economic indicators before I jump to any conclusions. And I like to start with Consumer Price Index, CPI. CPI is one of the most important statistics to help us keep on top of inflation because it weighs the prices for the same basket of goods from month to month. It shows us how prices are increasing or decreasing. In April and May of this year, year over year, CPI increased. First by 4.2% in April, and then by 5% in May. When we got the figures in for June, it gave us our third month in a row with an increase, 5.4%. You can see where the numbers are going, up and up and up. And for retirees, the story gets much worse because the basket of goods and services that retirees spend their money on tend to inflate at a much higher rate, like healthcare. And also retirees remembering the 70s are scared of inflation. And there's something else going on in the economy that reminds me of the 70s, and that's stagflation. It's a combination of stagnation and inflation. In the 1970s, we had an average of about 8% annual inflation, and that's scary. In some months, inflation hit double digits, and that's even scarier. So today, we're seeing a similar pattern. Inflation appears to be going up, and the government is proposing even more spending. The American Rescue Plan could feasibly push us further into inflation. Money supply growth is at the fastest rate in 4 decades. We're facing a number of factors that are causing economic stagnation, not the least of which is the Delta variant, which could keep unemployment high or even make it worse. Last week, talk of potential new lockdowns caused the Dow Jones Industrial Average to have its worst day in almost 9 months. Very similar to the 1970s, this is a recipe for stagnation. Why is this important? Understanding that there are many economic factors that can affect the value of your savings and your retirement is the reason. We make plans for retirement. Maybe you want to travel the country in an RV. Maybe you want to buy that perfect retirement home. Whatever your plans are, so often retirement plans have to be canceled because we can't afford them because of what's happening in the economy. So many retirees get caught in the crosshairs of asset prices falling during or before retirement, and some people even have to go back to work. Retirement is supposed to be the reward for all your years of hard work, not the cause of anxiety and fear. All this economic volatility is thankfully a coin with two sides, in a way that can benefit retirement savers. Here's how. When the economy is unsettled, physical gold and silver, through many periods of history, have shown they tend to react differently than traditional assets. That's why gold and silver are used by so many retirement savers as a way to get a little balance in their portfolios and some peace of mind about their future. Let's look briefly at what happened to gold and silver from January 1970 to January 1980. Gold rose in value by 1,500% and silver increased in value by 2,100%. The reason why this happens is gold and silver are a completely different asset class than traditional assets like stocks, bonds, and annuities. That's what creates the balance. Back to the question that I get asked all the time. What is going to happen with inflation? As mentioned, there are two trends of thought, those who say there's nothing to worry about, and those that say there is something to worry about. Let's dig behind the economic indicators. What is causing CPI to be at 5.4%, rising month after month after month? So we're going upward. Well, one of the costs behind that is labor. We have McDonald's at $15 an hour, Amazon at $17 an hour, and all my cohorts from Harvard that are in global companies tell me that labor costs are going up. There's one thing I've learned is that when you start paying people more, you cannot pull it backwards. That means the cost of labor is going to be factored in to the prices of your goods and services. So you can never pull those prices back. That means inflation not only is here, I feel that I'm in the camp that inflation is actually something that we do have to worry about, that it is rising. It's important to understand what's influencing that. That's why you should attend a web conference with us so that you can really learn what's going on in the economy and how it might affect your savings and your retirement. For more information about what's happening in the economy and how gold and silver play a role, go to Augusta Precious Metals website and sign up for our free guide. Better yet, sign up for a one-on-one web conference with me or a member of Augusta's education team. We're here to help. If you enjoyed this content, make sure to subscribe to our channel and check back often for more updates.